Bloomberg Audio Studios.
Podcasts, radio, news.
The travel sector showing a little bit more optimism. Tony Capuano, the president and CEO of Marriott, saying this on the latest earnings call. The demand for all types of travel remains strong, even as the rebound impact from the pandemic has waned. I'm pleased to say that Tony joins us now and he'll be with us through the hour. Tony, good morning to you.
Good morning.
8,800 properties, 139 countries. You've got a decent line of sight into the global consumer. The story we've heard a lot about is US strong, rest of the world not so good. Do you see it the other way around in your business?
Yeah, I don't know that I would say the U.S. is weak. I think the U.S. has reached a normalized environment a little more quickly. If you look at the experience we had in our business last year, we saw global RevPAR, revenue per available room, which is the metric that we use to evaluate the strength of the business, increase about 15%. Single-digit growth here at home in the U.S., strong double-digit growth internationally. Now, some of that is because those markets opened a little more slowly, so they benefited from easier year-over-year comparisons. But even as we look into 24, we guided on our earnings call 3 to 5% global RevPAR growth this year. Again, disproportionately stronger international.
Let's sit in international just for a moment. So UK economy's contracting, Germany arguably in recession, Japan in one, China struggling. You don't see it in quite the same way, and I find that really, really interesting. Are you seeing a bounce back there? What do you actually see, in which region are you more constructive on?
So Asia broadly is really strong from a travel perspective right now. We think about Asia in two buckets, if you will. What we call APEC, Asia Pacific excluding China, and then Greater China. Greater China is fully recovered to pre-pandemic levels, although interestingly, largely on the shoulders of domestic demand. If you look at cross-border airlift, it's only about 60 or 70% recovered to pre-pandemic levels. So we actually think there's still a fair amount of upside to the China recovery story as more and more cross-border travel recovers. I'll be in China in 2 weeks, and I'm anxious to see how it feels in terms of international travel. I was there maybe 9 months ago, and it felt very domestic. I was in markets like Changsha and Chengdu, and felt like I was one of the few international travelers. So it'll be quite interesting. When you look at the APEC markets, they are booming. Thailand is very strong. Singapore is very strong. I was just in Vietnam, really strong both from a development perspective and an inbound travel perspective. And the last comment I would make, you've seen China create some visa-free travel zones across the APEC region, and that's really impacting demand patterns.
I have to go there. We talk about banning iPhones. Is there a problem with staying at a Marriott hotel in China?
No. It's our second largest market. We just opened our 500th hotel in China. We've got another 400 hotels in the pipeline behind that. The vast majority of our portfolio is China-owned. The vast majority of our workforce is Chinese. So we see great strength in our China business.
Moving forward, I am curious about where you see the demand coming from. I know you've been expanding into mid-scale, extended sale, mid-scale types of accommodations. Is that because you see the growth in actually lower income and medium income families and not as much in the luxury sector?
That's a good question. My view is it's not binary. We have the largest luxury portfolio in the industry. We have more than 500 luxury hotels globally, another 250 in the pipeline behind that. We saw revenue per available room in the luxury portfolio actually grow 10%. I was listening to the prior segment and hearing about trade down. We're not seeing that from luxury. Luxury continues to be a really strong segment for us. Our entry into mid-scale is really intended to open the aperture. Our objective simply is to try and capture as broad a segment of the traveling public as possible, and entry into mid-scale just allows us to capture a broader segment of the traveling public.
Can I ask you what is mid-scale? Can you describe that? What is the difference between, say, mid-scale and luxury? And what do you call the other end of the scale?
So luxury is obviously from a physical product perspective and a service delivery perspective, everything you could hope for. Mid-scale, simply put, cheap and cheerful, right? Simple, high-quality facility, but simply delivered. Minimal services, great bed, great shower, great Wi-Fi, but relatively limited services.
When you're looking at that mid-scale, your competitor IHG was on yesterday and talked about next 10-year projections. U.S. middle class will grow 100 million. China's middle class, 200 million. When you look at building out the middle class around the world, where is it? Is that in China?
It's everywhere. I mean, I think across Asia you see really strong growth in mid-scale. You see it here in the U.S. And that consumer, we want to get them exposed to the breadth of our portfolio early. We've got nearly 200 million members in our loyalty program, Bonvoy. By entering the mid-scale segment for the first time, it gives us the ability to show a segment of the traveling public the breadth of the portfolio who perhaps isn't aware of the 30 brands that make up Marriott today.
All I can say is that side of the table is the luxury side, and this is the cheap and cheerful side.
See, I can take you off.
Yeah, exactly. It's sort of a question of...
I love it. Tom's not here anymore, so you beat up on me instead.
Well, I mean, am I wrong?
Tom would be on that.
I know, I miss talking about Venice with Tom.
No, it's fine.
I'm not going
Let's
there.
move on. There is this question, though, about what Cameron Dawson was saying, which is we are seeing delinquencies tick up. We are seeing retail sales come in weaker than expected. We are seeing signs of cracks on the margins. Are you not seeing it? I mean, yes, because you're offering a wonderful product and et cetera, but is it partly because people continue to prioritize travel in a way that they just didn't before the pandemic?
I think that's exactly right. One of the great benefits of our credit card partnerships with JP Morgan Chase and American Express is we have really deep insights into that consumer spending. And even prior to the pandemic, what we saw, maybe with younger demographics, was a shift towards or away from spending on hard goods towards spending on experiences. It appears when we look at that data today, the pandemic acted as an accelerant to that trend across demographics. And as a result now, perhaps the consumer saw or learned during the pandemic, I didn't buy any purses, I didn't buy any watches, I didn't buy any shoes, and I didn't miss it that much, but I sure missed traveling. And so I've prioritized that disposable income I have, and I am seeking the vacation that I missed, the family reunion, the wedding, the trip with friends, whatever it might be. And so we really don't see that decline in travel spending in the data. We just reported fourth quarter and full year earnings, highest EBITDA in the history of the company, as I mentioned, 15% RevPAR growth, really extraordinary numbers. And what was encouraging to me, the strength we saw was across geographies and across demand sectors.
I miss the service. Can we talk about that? I'm not talking about Marriott now, just for the record. I'm talking about hotels in general. You go in, the towels are there, they might be on the floor. I'm usually good about that. I'll put that on the side. I don't want to make too much work for people. But then there'll be this little card that will say something like, we're going green, so we're pulling back on washing things. And I say the same thing every single time I'm in a hotel room. Are we using going green as an excuse to provide less service than we used to at hotels?
Yeah, I think that would be a fair view if you didn't have optionality. And so if your view is, I want fresh towels every day, I want my bed remade every day,
we can still get them.
You can absolutely still get it. But what we hear from our customers more and more is they want the ability to contribute sustainability and have sustainability be a part of their travel choice.
At the high end? At
really
the luxury
across
scale?
the board.
Interesting. All right. I rule myself out personally. I think that when I go and you spend that much money, you...
Towels at the St. Regis?
No, I'm not getting into that. If you go to a hotel, five-star hotel, you spend real money to go and stay there, you want fresh towels, fresh sheets, don't you? Isn't that a whole part of the experience?
I don't need to go into...
How often do you wash your towel at home?
At home. Every couple of days, a fresh towel. Every couple of days.
Honestly, I can reuse my towel because I feel like I'm obligated to
It's the
participate.
conversation I didn't expect. but ultimately I'm getting to the point about service. Don't you feel like service has pulled back since the pandemic?
Oh, without a
I
doubt.
do.
It has been. And it's been sort of an open, not secret, because frankly, there wasn't the staff, which raises this question of whether you can hire enough people and what kind of people you can retain over a longer period of time. It's a good question we can get into.
Yeah. Although one of the things that's been interesting when you've watched the employment reports over the last number of quarters, you see that hospitality has been a disproportionate contributor as our industry sector staffs.
Very true. And I'll say this for the record, staying at my house is not $1,000 a night. Tony Capuano of Marriott International.